Hey there, curious minds. Imagine waking up to find your savings slashed in half overnight. Sounds like a nightmare? It's a real risk if Japan's economy collapses, and the cracks are already showing. Get ready, because this could be worse than Greece's crisis ever was. Let's dive into why Japan's economy is a global time bomb that could hit your wallet. Japan's not just another country. It's a financial powerhouse, and its troubles could shake your investments, your savings, even the price of your groceries. Japan's economy is crashing and dragging the whole world down with it. Its enormous debt load is threatening to sink the global markets. Bond yields are surging, shaking investor confidence. And the once mighty yen is losing strength, sparking turmoil in global currency markets. If that's not enough, an aging population and dwindling workforce mean Japan's tax base is shrinking, while expenses are skyrocketing. It's like watching a house of cards about to fall. But here's where it hits close to home. Japan owns a ton of U.S. debt. If things go south, this could mess up your investments, savings, and even your daily life. We're about to dive deep into Japan's economic crisis and uncover what it really means for you. So buckle up, because this journey will show you how one nation's crisis can affect your wallet and why ignoring it could leave you high and dry. What sets Japan apart is how much power it wields in the global financial arena. It's the world's third biggest economy, holds more than $1 trillion in foreign assets, and is the largest foreign holder of U.S. treasuries. These are the IOUs that represent America's debt. In simple terms, when Japan buys U.S. treasuries, it lends money to the United States, and in return it receives promises to pay back with interest. This would add to the pressure on the United States, making it harder for people and businesses to borrow money. It discourages saving and makes it hard for banks to earn money. It's like getting paid just 1% interest on your savings account when inflation is higher. You'd lose money by saving. That's the change Japan's experiencing. These increases might seem tiny, but they're big steps in a country where rates have been near zero for over a decade. Japan's problems won't magically vanish. Addressing them will take time and tough decisions. And while predicting the future is impossible, one thing is clear: Japan's crisis has the potential to shake the world economy. Countries like the United States, China, and the European Union.
First, the numbers don't lie. In Q1 2025, Japan's GDP shrank by to more than expected due to weak consumer spending and rising import costs. CNBC. This isn't just a blip, it's a symptom of deeper issues. Japan's population is aging fast. 30 are over 65, and the birth rate is a mere 1.3
children per woman,
far below the 2.1 needed to sustain a population. World Bank. By 2050, Japan could lose 20 million people. Think the entire state of Florida vanishing. Opening parenthesis Nippon.com. Fewer workers means slower growth, less tax revenue, and soaring costs for healthcare and pensions. It's like trying to run a business with half your staff retiring and no replacements. Then there's the debt crisis. Japan's government debt is over $9 trillion, with a debt-to-GDP ratio of 2.60, the highest in the developed world. Statista. For decades, the Bank of Japan (BOJ) kept this manageable by buying up half the bond market and holding interest rates near zero. But that's changing. In March 2024, the BOJ raised rates to 0.1%, and by May 2025, they're at 0.5%. Reuters. This has pushed bond yields to historic highs. 30-year bonds at 2.91%, 40-year bonds at 3.689%. CNBC. Weak demand at bond auctions, like the 20-year sale in May 2025, shows investors are losing faith. Bloomberg. Why? They're worried Japan can't keep paying its bills. Now, let's talk about the yen carry trade, a financial trick that's been a global game changer. Investors borrow yen at near zero rates, convert it to dollars or euros, and invest in higher yielding assets like stocks or real estate. But when Japanese rates rise, and the yen strengthens like it did by over 10% in weeks into 2024, investors must sell those assets to repay loans. Reuters. This triggered a flash crash in Japanese stocks in 2024. with ripples hitting us markets and even Bitcoin. In 2025, this unwind is still shaking things up. Here's what most people miss: Japan's role as a global creditor. If Japan sells these to fund its own needs like supporting the yen or covering debt payments, it could flood the market, pushing up US interest rates. Reuters. That means higher costs for your mortgage, car loan, or credit card debt. For investors, it could shift money from stocks to bonds, causing market chaos. So why is this worse than Greece's crisis? Greece's issues were mostly a European problem. Japan's economy is the world's fifth largest, and its financial ties run deep. Wikipedia. A collapse here could spark a global recession, hitting your portfolio and your daily life. Now that you see the storm, let's talk about protecting yourself. Japan's crisis isn't guaranteed to crash everything. Central banks have tools, and Japan's managed its debt for decades. But ignoring this could cost you. Here's your blueprint. First, stay informed. Track Japan's bond yields, US Treasury holdings, and global market trends on sites like Bloomberg or CNBC. Knowledge is your first line of defense. Second, diversify your investments. Spread your money across stocks, bonds, real estate, and commodities like gold. If you're risk tolerant, consider a small allocation 5-10 to Bitcoin. Why? As trust in fiat currencies fades, Bitcoin's finite supply makes it a hedge against inflation. In May 2025, it hit 112,509.65, a record high. Investopedia. Japan's Metaplanet is stockpiling Bitcoin as a shield against bond market woes. Reuters. But beware, Bitcoin's volatility is like a roller coaster with no brakes. Third, brace for volatility. Keep an emergency fund with 3-6 months of expenses. Avoid high interest debt, as rising rates could squeeze you. Fourth, think long term. Markets recover over time. Don't panic, stick to your plan. Here's the twist. Japan's crisis isn't just a threat, it's an opportunity. As fiat systems wobble, new assets like Bitcoin are gaining ground. Smart investors can position themselves to thrive. Imagine two futures. In one, Japan reforms its economy, maybe boosting immigration or raising the retirement age. The BOJ balances rates, and global markets stabilize. Bond auctions fail, yields soar, and borrowing stops. This triggers a global crisis worse than 2008. Stocks crash, currencies tank, and costs for food and fuel skyrocket. Your savings and retirement plans take a hit. Which is more likely? It's uncertain, but Japan's $1 trillion in US treasuries and global financial role make it a bigger threat than Greece. Reuters. Here's the opportunity: crises spark change. Bitcoin's 2025 surge shows investors are seeking alternatives. CNBC. If you act wisely, you can protect and even grow your wealth. So, what's your move? Educate yourself on global economics. Diversify your portfolio. Stay vigilant and manage debt. In 2008, those who diversified and stayed calm came out stronger. Japan's crisis could be similar. Preparation is your shield. Japan's troubles are a wake-up call. One country's struggle can hit your wallet. Stay informed, act smart, and protect your future. If this video opened your eyes, hit that like button and subscribe to Sparks Insights for more. Let's talk. Comment below, are you worried about Japan's crisis, or do you see opportunities?